Hello and welcome to Extreme Crypto. Today we'll be discussing another form of Japanese candlestick that is very popular in our trading chart. We'll be discussing a very important candlestick. It comes in many varieties, but they are very important to our trading techniques. And the name of the candlestick we'll be discussing today is the Doji Candlestick. It is a very popular candlestick, and like we say, all candlestick, each of them have a different story they tell. So what will help you understand the market better is to understand the story the candlestick is telling you. So today we'll be discussing the Doji Candlesticks and its other sisters. The Doji Candlestick signifies indecision in the market. It is a candle that when you see it, it is telling us that the market is not decisive, doesn't know where to go, whether to be bullish or to be bearish. That means the bull and the bear are in stalemate. So nobody is winning at this particular period of time. So the Doji Candlesticks looks like this. It looks like a cross, but this is just one of the sisters of the candlesticks, and this is very popular. So when you see this, you should know that this is called a Doji Candlesticks. We have this other candlestick. This first Doji Candlestick is known as the Cross Doji, and this one is known as the Dragonfly, and we have the other one which is known as the Gravestone Doji. It is known as the Gravestone Doji. So all these candlesticks that we have seen now, these are just the textbook design. So this one might also be known as a long leg doji, but this one is known, this particular one that we are seeing on our screen is called cross. So there's another variety of it that is known as long leg doji that looks like this, something like this, and we just have something like this. We can also have another varieties of this dragonfly, which will give us something like this. And for the Gravestone Doji, we can have something like this. So we can have some wick on it. It might not be perfect like this. What we are seeing on our screen are just textbook formation. So most of the time when you see chart, you can see something like this or something like this. Let's continue with our explanation on it. So it is formed when the opening and closing price are the same with a long lower or upper wick or the two. So a doji is formed. This is the opening here, and this is also the closing. This is the high and this is the low. So what this is telling us is that when the opening and the closing are the same price, so we are having a doji formation. And we can have a lower or upper wick. So if we are having a lower wick, this one is a lower wick. So we are forming a dragonfly doji, and we are having an upper wick here. And here we are forming a gravestone doji. So in a situation whereby we are having the upper wick and the lower wick, we are either forming a cross doji or a long leg doji. So what is really important here is not memorizing the names of all these things, but what is really important is to know the work they do. It is formed when the opening and the closing price are the same with long, lower or upper wick or the two. The candle is of three major types. We have explained them: the cross doji, the dragonfly doji, and the gravestone doji. We can actually see them on our screen. And the next is that it always indicates reversal with no specific direction. So what Doji Candlestick is always telling us is that the market is about to reverse. But like we have explained in our previous videos, that when we mean reversals, we mean that is either the market is about to just go flat or the current trend is about to end. When you see a doji price action, the next thing you have to do is just take profit and exit the market. because you don't know what the market is trying to do. And like we have explained before, that the doji signifies indecision in the market. You don't know whether the trend wants to continue or it is about to end. So what is good for you to do is just close your position at that particular period of time when you see a doji price action. For efficiency, it should be used with other technical analysis tools to confirm a trade opening. Like we have always been saying, that candlestick alone cannot be used to open a trade or to make trading decision. So it is best to combine it with other technical analysis tools. And the color is insignificant. So the color of the doji you have on your chart, whether it is bullish or bearish or whatever color, whether green or red, it is insignificant. What's the story? What is important is the story that the candlestick is telling us right now. Let's look at some charts and explain how this doji formation impacts the movement of a market, or how they affect a market trend. In this chart now, we can pinpoint some doji, or let's take a look at doji and explain how they work here now. In this price chart, this particular one here, this particular candle is a long leg doji. And if you look at it from here, the market start moving up, and at this particular point we have a sharp decline. So this one is trying to tell us that if you have short the market from this period, or from this point here now, you should be looking at exiting the market right away. Because if you look at it now, the long leg doji, from there immediately it ends that downtrend and the market starts going up. Look at it, a strong bullish movement, and the market starts going up again. So that is why we say it is a market reversal, and you don't use it to initiate trade. You use it to close position. If you look at it here now, in this particular period of time, this price chart we are looking at is phantom, FTM, and this is a 4-hourly chart. And if you look at it here, this is a doji, and this is another doji. So this might look like a gravestone doji, and this is a dragonfly. If you look at it now, we are in a downtrend and we saw a gravestone doji. So most of the time, the difference between the gravestone doji and the dragonfly doji is that the dragonfly doji is a bullish candle, and the gravestone doji is bearish. It is the opposite of this dragonfly. So because what it's trying to tell us is that the market opens at this particular point. Let's say it moves up small, and the bears came in and pushed the market down until the bulls came in and pushed it up to almost the exact point where it opened, and it closed at that particular point. So that means what this candlestick is trying to tell us is that the bulls are very strong at this particular point. So the opposite is what is happening for the gravestone. So most of the time, the mistake some people make is that they try to initiate position when they see these candlesticks. Like, okay, let's say for example, you see a gravestone doji and you look at it that, okay, the bears are already taking over the market, and you open a position at that particular point. You might be wrong. Just an example that we'll have here now. If you look at it now, you open a particular short position here now, the market move up a bit and start coming down. So normally, because of your gravestone doji, you expect that the market should come down, and from here now it just moved down a bit and start moving up stronger. We can actually say you cannot initiate a position with this doji candlestick. What you are meant to do is to exit your position. because they signifies indecision in the market. That is about this chart. Let's take a look at another chart and see an example. So let's analyze this chart again. We can see here from this point, can see another doji. So like we told us that doji signifies indecision in the market. So if you have taken a position here now and you look at it that, okay, this is an uptrend, and you take a position, it is actually going down. So you might think that you are right because you look at it that, okay, this is indecision in the market, and you look at it that, okay, this is the bearish candle. So the best option the best way to have trade this doji is that, let's say for example, you enter a long position here, and you see this candle, you are meant to close the position at this particular period of time, because you can't really say what the market is trying to do. And right now the market went down. If you look at the same thing here now, we have another doji here, and the market kept going up even after it had shown here. It looked like the market is coming down. And if at this point again you have taken a short position because you look at it that, okay, it has formed at the end of a bullish trend just the way it did here, and you have taken a short position from here again, you would have lost money, because it looks like it was going to come down and it started moving up again. So doji is for closing a position, not to initiate another position. So let's look again at this particular point, just like what we have seen earlier. So this particular point here, we have gravestone doji, and here we are having a dragonfly doji, and again we can say we are having a gravestone doji here. So look at all this doji formation here, and that should tell you that there are a lot of indecisions in the market. Like the market doesn't know where to go. That means you have to be careful. Let's say for example you open this particular position, you start going short because you look at it that probably the market is going down more, and now you look at this formation again. This is the dragonfly doji. You look at it, okay, it is a bullish formation of doji. You enter it again that the market is going up. Actually it looked like it went up a bit and it started falling again, and now we have a new formation which is a gravestone doji again. And from here, what would you say? Are you going to short the market again? And if you have done that, you would have lost money because the market started going up again and from there came down abruptly. So what doji is actually meant for is for closing position, and just wait for the next formation after it before you can initiate another position. You don't enter a new position with doji candlestick. So things to remember is that, 1, doji indicates that there is equality in the market. There's equality in the market, so you don't know where the market wants to go to. So it is very important to also note that you close position on doji formation. And you don't try to initiate another new position on that. You close position on doji formation. So these two things are very important. And when you know all this, combined with your previous knowledge of other candlestick pattern, you will be able to make a better informed trade, a trade with a good decision behind it. You understand now, not just you are opening a trade because you want to open a trade. Now you know the reason why you should open a trade, the reason why you should close a trade. You understand now? So the candlesticks are telling stories of other participants in the market. So you know the reason why a candlestick is formed, know the reason why it is formed, and know what decision to take when it is formed. So it is important that you understand all this about the doji candlestick. That is all about doji candlesticks. Thank you for watching, and in the upcoming videos we'll be talking about other candlesticks. And note that candlestick formation alone is not enough to trade, so you combine it with your other technical analysis too. So You are not to open a position or do anything alone with your candlestick formation. You just combine them with your other technical analysis. Thank you.